Hello everybody, hope you're all doing well. Welcome back to a new video. It's been a while and I'm looking to get back into creating the videos. So I thought what better way to kick it off with a trade recap. So first things first, this is euro dollar and this has happened today, so the 29th of November. And yeah, it was a great trade. As you can see here, this is the before. And what I'll do is I'll show you the after and then I'll show you the thought process behind it. This is before I marked it up, as you can see there this morning, 23 minutes past 8 this morning. I was looking for price to mitigate this zone and continue to the downside, okay? Now if I just remove that and we jump onto the charts, as you can see here, this is the current price action. Now we could expect price to head back into the previous week's high, back within that sort of range. However, I was happy to target into these lows just because you had equal lows here and also some trendline liquidity here as well. So obviously I was expecting price to come up, come below and sweep that liquidity. Now before I move on and carry on with the trade recap, I'm sure many of you are wondering where are your dark charts. Don't worry, I still use them on a different monitor. I just thought I'd use a light chart for just why not. So yeah, as you can see, going back to the trade recap anyways, we target into those lows and we got a nice entry there on the lower time frame. Now if I just go to the 1 hour time frame, I don't really use the 1 hour time frame, but it's more so just to sort of have a look at the overall view of the charts. Now if we take a look from this week, this is tied in with the midweek reversal. As you know, Monday's at the opening range and then we head into the midweek. We start to see midweek reversal. Obviously not every week it happens, but usually you can see the midweek start to change. So for example, if you look from Monday, we're overall moving bullish, and Wednesday kicked in and we had a nice bearish move here as well. Now quickly, what I want to show you as well is if we head to the weekly time frame, we can see here that we had took out the previous week's high, and also obviously if you go back to the 1 hour, you can see here that we had swept this high here as well. And I think you can see a bit more clearer on the 4 hour. Oops. So as you can see here, we have this range high, range low, and obviously price wicked this high. Now obviously we don't use wick breaks as our structure breaks on the 4 hour. We only look at it as sort of sweep. All right, so we can look at that as a sweep entry. So the confluences right now at this point is we're heading into Wednesday. We could anticipate a midweek reversal as a previous Monday, Tuesday, morning. Wednesday was bullish. So we could anticipate that a bearish move could occur. As you can see, it's a very predominantly bullish market beforehand. We also took out this weekly high as well. So that's another confluence in which we could look to trade from. And also again, we swept out this 4 hour high. Okay. Now when we drop to the 15-minute as well, you'd be able to see here that we had choked bearish to the downside. So as you can see here, we swept out, this is the 4 hour high that we had swept just a second ago that we just discussed. And then obviously, as you can see here, we've got the 15-minute range and then we choked bearish here with a nice aggressive pull to the downside. Obviously, this is Frankfurt open at this point as well. So we left that imbalance behind and then I just took it as the range because this was just a range. If I could have took it from here, that's fine and still class it as mitigated because again, we do have to factor in the imbalance. But I just took it as the range just because this candle wick high overpowers that wick high anyways. Maybe I would have took it if this was a bit bigger in terms of if that wick went up a bit there, maybe I would have took it like that. However, just because this one overpowered that, I just thought I'd take it as that range. So as you can see here, we choked bearish here. We could have looked at it as a flip as well. So price came back down with a slight little reaction to the upside. We just sort of consolidated and then we had that aggressive move to the downside. So obviously indicating that bearish pressure entering into the markets. And if we head to the 1 minute time frame, as always, the entry time frame, as you can see here. Now we did take a choch here, but we did see a choch here, and I was ideally looking at this zone first. I've been looking at bearish engulfed, and I'll explain what I've been looking at in a minute. So as you can see here, we came back down, sort of like a flip scenario in this case here. However, we could have looked at that as inducement, so the price swept out the high, filled the remaining imbalance that was left behind, and obviously took out the early sellers there. Now again, even if you entered off a sell limit order, you could have still got away with a nice trade there if you stopped above the overall high. However, what I did in this case was I waited for price to come up to obviously mitigated either these zones, because the way I see it, as long as price mitigates something, it has cause for price to move a certain area. So if I'm not going to just take a trade blindly You know, so I like to see if it mitigates it. Like, for example, if we took out this high, that trade would have been invalidated. However, we come up to the zone, we've seen a bearish engulfing candle to the downside, and I waited for another bearish candle. So I waited for 2 bearish candles, and as you can see there, got a nice entry there. Stops were a little bit aggressive. I mean, ideally, to be more safer, you could have gotten away with the stops above here, and that probably would have been the better scenario in my opinion. However, just because I felt a bit risky, and I wanted to take the risk, I was happy with the risk. I risked 0.5% on a funded account. I was happy taking that risk, and there you go, Bob is your uncle. So 2 candles there to the downside, nice engulfing candle, taking out the previous candle lows. We have obviously mitigated this zone, so we got calls, and obviously again it was a hop off a high time frame range zone, supply zone, which we saw. And again, just going over the Confluences again, we took out the previous week high. It also swept the 4-hour high with the wick, so again indicating potential bearish pressure. And also we had a nice bearish M15 move, in which you did see, and I guess people would refer to it as displacement, but I just see it as an aggressive imbalanced push. That's what I've always referred to it as anyways. And then obviously again we took out the previous week high, took out the 4-hour high, and again we head into Wednesday. So Monday's the opening range, Friday's the closing range, but Wednesday is where we can see a potential reversal in the markets. You may have heard me mention it before. I mentioned it in the 2022 course, I believe, and it is known as the midweek reversal. And that's a similarity in which happens in the markets, and something you can see quite often. If you go over your charts, you don't have to place any trades, just go over past data. You'll see that Wednesday, maybe Thursday max, but Wednesday is the ideal day in which the market does potentially reverse, depending on what it was doing on the Monday and Tuesday prior. Okay, so as you can see there, bearish engulfing, another bearish candle just to confirm that trade, and then again, boom, target the overall lows. Ideally, we could have, you know, looked to target here, could have took off some partials at this low or whatever, but I was happy targeting this low here, just because, you know, we had liquidity there, and once obviously price reaches liquidity, anything can happen. You know, we could have targeted back into the weekly high, but again, it's enough, you know, it's fine going there. And just to be safe, I would recommend probably just to go but the high until you get a bit more comfortable or confident in executing, and then look at having your stops quite aggressive. Okay, that's nice 5.86. Obviously, when you reduce that, because that's based off 1% risk, when you reduce that to a 0.5%, it's obviously slightly lower. It's half that, but still a great, fantastic trade. And yeah, that was pretty much it. With that being said, guys, any questions, make sure you do drop me a message as always, and I'll catch you on the next video. If you are interested in our mentorship and our course, make sure you go ahead and hit the link below and head over to our website, and there you can find further information. As always, guys, thank you for watching.